Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, we have a lot to digest in today's show, especially few debutants on Dalal Street this morning, and we'll be putting one of them in the spotlight. And today we are putting Bikaji Foods in the spotlight. If you look at the issue, the IPO that came out, not so long ago, it was pretty much in demand, almost 27 times subscription overall. If you look at the QIPs, they were among the bigger buyers, or the demand at least for the stock was quite high among them. So clearly, it has been a much sought after stock, a lot of news flow around it. But how will the company debut on the bourses today when the bell bongs at 10 a.m. for the stock? Now, if you look at the grey market premium for the counter, they're indicating actually not that great a premium, about 10% uptick on the stock from the issue price of about 300 rupees. Clearly, the recent, probably valuation, maybe the demand from retail investors not being that strong as was expected, maybe has had some effect on the grey market premium of the stock. And if you look at what the analysts had to say, they were largely quite optimistic about the prospects of Bikaji Foods. And for them, this was not just a stock that could provide very good listing gains, but also could be a very strong play for the long-term investors as well. They are looking at it as a portfolio stock. And I think you can sense that from the fact that Santo, the QIB portion of the stock, actually saw a humongous amount of demand. So clearly, institutional investors buying into a consumer story in India, available after a very long time. You don't really see, consumer stories coming into the market that often, especially from the FMCG sector. So clearly, investors were, at least institutional investors, were very much licking their fingers when they saw the stock. The earnings performance has been largely decent. Yes, there could be some issues raised about the valuations, but I'll leave that to Santo here.
CJ, very interesting line you mentioned there, institutional investors actually licking their fingers. Now, I've always been skeptical of IPOs in general, at least 9 out of 10. You see, just before the IPO, you will see the numbers being quite good, big jump in profits, top line, everything. And after listing, usually in at least 9 cases out of 10, at least 8 cases out of 10, it's the same story. The growth rates are nowhere as high as they've shown at the time when the company was coming public. First point here is valuations. At close to about 90 plus, close to 95 odd times trailing 12-month earning, the stock is pretty expensive. Now, because the overall market sentiment is quite upbeat at this point in time, of course, it's got a very good response. But will this kind of valuation sustain? Remember, CJ, the market is demanding, the promoters here are demanding valuations on par with FMCG names like Nestle and Britannia. Let's not forget that. Now, can these kind of valuations sustain? And also, CJ, some perspective here. I'm reminded of the euphoria around Pratap Snacks when it had made its debut in December 2017. There was a lot of excitement. The stock did well initially, but over the 5 years, almost 5 years that the company has been listed, the returns have been very, very dismal. Nothing to write home at all. So I think, CJ, once the euphoria fades here, unless Bikaji is able to show that kind of growth rate, if you are asking for about 100 times trailing, 95 to 100 times trailing 12-month P, you need to show that with, you need to justify that with your earnings. So I'm not very
Santo, I take your point, of course, on valuations, but I think valuations also are probably sometimes a factor of quality and scarcity as well. And in Indian market, generally consumer names, FMCG names in particular, have tended to command a higher valuation, largely because of course, they're a play on the India's consumer market. So of course, your earnings are much more steady. They're much more stable. You can count on them to grow at a sustained pace for a very, very, very long period of time that we have seen in many names in Indian market. You talk about HUL, you talk about ITC, you talk about Britannia's, you talk about Nestle India, for example. Until unless, of course, some sort of regulatory issues come in, generally FMCG companies have tended to be much more secure, and it is that quality that generally provides that maybe extra 20-30 PE on the stock than you would probably see in any other company outside there. That said, also, I think you're being a little unfair to compare Pratap Snacks, or who are the promoter of course, Diamond, the brand name Diamond, of course, on whose name you see a lot of food sold across India, especially in tier towns, semi-urban towns as well. I think Bikaji, compared to Pratap's, has a much solid brand, has a much solid brand recall. There is already a very, very strong market for Indian-based snacks and those sort of items. And we have seen in recent years how these sort of almost even companies like HUL have started to bring in these sort of products into the market to try to capture that market. So clearly this is an established player, very, very strong history, very, very strong brand recall, and I think that is what a lot of institutional investors at this point of time are betting on, that the growth rate of the company will sustain at current pace and may even get better as India's per capita income, India's discretionary spending goes higher.
Well, 6 months down the line, we can debate this issue.
No, we should talk about it 6 years down the line, Santo. 6 months is too short a time. Well, that said, let's quickly take a look at the trade setup for today. And it is looking like a muted start. Of course, a lot of news flow coming in from Europe this morning, and that probably might have some impact. If you look at the SGX Nifty futures, they're indicating a negative opening for the benchmark indices here, but that is largely because of what is happening or emerging, at least in Europe at this point of time, where Poland has announced that they were struck by Russian-made missiles. They have not yet confirmed whether the missiles were fired by Russia or not, but the news flow at this point of time is emerging that Poland was struck by Russian-made missiles at one of its villages inside its border. The G20 meet, US has already called for an emergency meeting of G7 members, and there is suspicion that Poland may call for Article 5 to be implemented, wherein basically if one NATO member is attacked, other NATO members have to come to its defense. So that remains to be seen. At this point of time, the situation has not escalated too much, except for on Twitter, where already World War III is trending. but
it will be playing out.
Absolutely, but yeah, at this point of time, at least investors are keeping their sanity with themselves. Apart from that, of course, if you look at the cues from Wall Street, that they were quite strong. So it will be a little interesting to see how investors react to the opening bell, because Wall Street indices did rally yesterday after producer price index, or the producer prices, or what is equivalent of the WPI here in India, that also softened on a month-on-month basis in the month of October, and also on a year-on-year basis. So clearly indicating that the grip on of inflation in the US economy is probably loosening a little bit, thanks to the firefighting that the Fed has been doing.
Well, CJ, it does look like renewed geopolitical concerns probably could slow down the pace of uptrend. Already at these levels, investors are having second thoughts about valuations, and now if you throw in geopolitical concerns as well, that I think could give pause to the institutional investors. Yesterday, interestingly, CJ, we saw both domestic investors as well as FIIs being net sellers.
Yeah.
And let's also not ignore some of the macro indicators, CJ. The contraction in exports for the month of October, it clearly shows that India cannot remain immune to a global slowdown.
True.
Right? This will invariably feed into our through the trade channels into the Indian industries as well. So there is need for some bit of caution at this point in time. A quick check on the F&O market. We are seeing short covering in the futures of Gujarat Gas and Balkrishna Industries. Long build-up seen in Apollo Tyres, Gujarat State Petronet and Indraprastha Gas, and short build-up is being seen in Coal India, GMR Infra Projects and Polycab.
Well, thank you, Santo, for those F&O cues. Now moving on to the newsmakers of the day. Of course, I talked about there being a lot of debutants, and the other debutant today on the last sheet would be Global Health, the operator of Medanta hospitals across the country. Therefore, the stock will be in focus ahead of its listing. Now, if you look at the grey market premium, it is indicating just a 5% premium to the stock's issue price of about 319 rupees. So looks like a very tepid debut at this point of time. I would not be surprised if you see the stock probably trading in the red territory once this listing has happened. Clearly, I think investors, the response to the IPO was also not that great compared to what we have been used to in 2021, but it looks like it is going to be a muted listing for Global Health. That said, analysts did recommend largely to subscribe to the IPO issue, because they do see, strengths in the company, of course, from a longer term perspective. Also, let's not forget that hospital stocks in general have been doing okay-ish in our market. If you talk about Apollo Hospitals, you talk about Narayana Hrudayalaya, a lot of these companies have been doing quite well, especially in terms of earnings. So it will be interesting to see if we see some follow-up demand for the stock, Santo. But I think this is one stock that will be in the lookout for this in today's trading session.
Well, Bharat Electronics is my newsmaker of the day. The company has signed an MOU with Hindustan Shipyard, and under the MOU, both companies will jointly develop and upgrade product system for domestic as well as export markets.
Well, Santo, I think it's time for our brokerage bets of the day, and your top brokerage bet
is Apollo Tyres from Nomura. Nomura has in fact downgraded its rating on the stock to 327 rupees. Now, a decent set of numbers there from Apollo Tyres, CJ, but however, Nomura has flagged a few concerns. One, it has pointed out that the demand in the replacement market, which is also quite a major market for Apollo Tyres, that has been pretty slow. And besides that, while the company did benefit from some easing in raw material prices, according to Nomura, the valuations at these levels may already be factoring in. And lastly, there is also the issue of increase in working capital debt. Now, Apollo had committed to reducing its overall debt, and because of the increase in working capital debt, Nomura feels that probably the timeline for reduction in debt could spill over to later of FY24.
Well, thank you, Santo. The top brokerage bet on my radar today would be Astral, a report coming out from Sharekhan not so long from today, and they have actually downgraded the stock from a rating of buy to a rating of hold, with a target price of about 2,200 rupees. Now, the reason why they have downgraded is basically the concerns around the piping business, where it seems the pricing pressure is escalating for a lot of these companies in the industry, and that is largely down to the fact that PVC prices in India have been crashing for the past month or so, and that clearly, because of PVC prices crashing, producers will have to end up lowering the prices of PVC pipes in the market, which is good from a demand perspective but bad from a margin perspective, and that is one of the reasons why Sharekhan has downgraded a stock. But that said, overall the brokerage remains quite optimistic on the longer term growth potential of the company. If you look at Astral Poly's valuation, it has been among the highest valued companies, in India, largely because of the growth potential that the company holds. And they believe that the scale of new business to provide reasons, they believe that these new businesses could sustain the trajectory that the company has been over the past 5 years. And they also believe that at 75 times 1 year forward earnings, at 75 times, Santo, 1 year forward earnings here to this, they believe that the stock is actually reasonably valued, fairly valued, and therefore neither there is too much downside from here, but nor there is too much upside at this point of time.
Well, and I think we are just about 10 seconds away from market opening, so we'll start with the market before we go on to the stocks, and it does seem like a muted start at this point in time.
Yeah, down tick, of course. The opening tick is down, but it seems like we have moved into the green territory.
Market breadth positive in early trade. 1100 stocks are up and close to about 650 stocks are down. ICICI Bank is among the gainers in early trade, up close to about 0.4%. Nifty mid cap is flattish, up 0.2%. Nifty Bank is under a bit of pressure.
Yes, Santo, and if you look at the small cap space, I think the Nifty small cap index is just holding about in the green territory, if I am not wrong. The Nifty small cap index, yes, higher by about 0.2%. The Nifty mid cap also has made a decent recovery, is now higher by 0.4%. So the broader market doing quite well. Sectorally, I think it will be interesting to see what FMCG IT indices are doing. The Nifty FMCG index, I think, is in the positive territory at this point of time, while the Nifty IT index also higher by about 0.2%. So overall, a decent start, not too concerning, but not too optimistic as well. And it will be very interesting to see if we see some sort of a momentum building up for the bulls throughout the rest of the day, depending, of course, on the sort of news flow that emerges from Europe going ahead. Well, coming back to stock take, Santo, what is the first stock on your radar?
Greaves Cotton, an average set of second quarter numbers there from the company, which is transitioning itself into a major electric vehicle play. Positive commentary from the company as far as the October performance goes, both for its electric mobility division, where it's said to have recorded sales of close to about 33,000 units, and it's also said that demand for both CNG as well as diesel engines have been pretty firm. Now, CJ, there was a lot of buzz around the stock some months back when it did seem that after years of wait, probably the stock is now in for a re-rating, but that fizzled out pretty quickly. And while the second quarter numbers on the whole, there's been a slight improvement, definitely nothing that would really want investors, want the market to sit up and take notice. So, I think probably at this stage, it does seem that the market is still waiting for a clear uptick in earnings, which somehow doesn't seem to be coming through, and you could be in for a longer wait in the stock.
Possibly, Santo. I think Greaves Cotton at this point of time has become a narrative stock, in the sense that there is a good narrative, a healthy narrative around the company in terms of a theme, that is the electric vehicle revolution. Now, it is probably among the listed space, it seems to be among the best plays on the EV revolution that is currently undergoing, that India is currently undergoing. Now, if you look at the EV arm itself, it registered record quarterly revenues in the second quarter, clearly indicating that demand for its products is surging. And overall, Santo, if you look at the new businesses of the company, the powertrain business is of course there, the EV business is also there. They are now contributing close to 60% of the company's sales. So this is not a company that is transitioning. It seems like this is a company that has already transitioned, and I think that is one of the reasons why the stock has done so well in the past 1.5 years. And going ahead, of course, investors would want to see more. Investors always want to see more in terms of earnings growth, in terms of margin profile, how the management will deal with competition, especially in the EV space, because a lot of the incumbents now, you talk about Hero MotoCorp, you talk about Bajaj Auto, they are also now ramping up their game. So how will Greaves Cotton tackle that, whether it will be able to sustain that market share in the EV space that it has been trying to gain, and of course competition from the startup space through Ola Electric as well. So it is not easy now. Yes, the initial euphoria is gone. It is now probably about execution, but the stock still remains among those the most sought after in this market. Well, the last stock on my radar, and the first stock as well, is Praj Industries, and this is largely a technical pick today. Because a very interesting report came out from Swastika InvestSmart. Now, they said that the stock is actually inhibiting very bullish momentum on the technical charts. After a 1 year long consolidation on the counter, it seems finally we are seeing signs of breakout on the back of very strong volumes as well. And that is one of the reasons why the stock, where the brokerage firm believes that they could see about 15% upside in the stock in the coming 2 to 3 weeks, given the fact with the target price somewhere in the range of about 500 rupees. So one stock to watch out for, Praj Industries, because it seems like on the technical charts, the stock is giving out a breakout.
Well, CJ, even the fundamental factors seem to be strongly in support of Praj Industries at this point in time. Sequentially also, the top line has grown by over 20%. Year on year, of course, it's a huge jump, more than 50%. Company has been able to maintain margins and good balance sheet as well. In fact, borrowings.
I think that has been one of the inherent strengths of the company.
Yeah, it's been a consistent performer of late. Again, investors have been queuing up for the stock. And if you look at institutional holdings in Praj Industries, that's risen by close to about from about 11 odd percentage point. 11 odd percent, it has risen to close to about 16% in the last couple of quarters. As I said, all parameters, whether it is receivables, whether it's working capital days, all of them has consistently shown an improvement. Even cash flow from operations are also pretty robust for March 2022. So nothing really to pick holes in this pick of yours.
Yeah, and if institutional investors are running after the stock, I think that is a clear indication that there is a lot to expect from the stock going ahead.
Well, Balkrishna Industries now very cautious commentary by the company management and post its earnings, and that probably could temper sentiment for the stock in the short term. The company has said that the situation in Europe remains pretty challenging, and so that will be felt in the second half performance. Now, demand from US so far has been decent, but there too there are fears of recession, which again could be a dampener for demand. Now, India business is stable, and also the company sees softer raw material prices improving its margins from the fourth quarter of this year, but on the whole, not a pretty picture, I would say, CJ. So one needs to be cautious here.
Yeah, and Santo, I was looking for some sort of silver lining from the entire, the earnings announcement as well as the commentary from the management. And I think Nomura, came out with a report on the stock, and they actually did pick up some silver linings for the company. They believe that the margin tailwinds clearly will be there for the company going ahead over the next 4 to 5 quarters because of the fact that raw material prices are coming down on a sequential basis. If you talk about energy cost, you talk about other raw materials, clearly there has been a marked decline on those fronts, and I think that will probably help at least improve the margin profile or the visibility on margin, if the even though the revenue visibility remains a little patchy at this point of time, because as you mentioned, the concerns in Europe as well as the possible recession in the US. That said, at 14 times, FY24 EV to EBITDA, the valuation that Nomura has given, they believe that the stock is actually quite inexpensive at this point of time. The key trigger, of course, for Balakrishna would be any sort of resolution in Europe. I think if there is any sort of visibility of a resolution in the ongoing Ukraine-Russia war, I think that could clearly spark a big short covering rally in the stock. But until unless that happens, I think the near term looks a little bleak for Balkrishna Industries.
Well, Somani Ceramics is the last stock on a watch list this morning. Now, October volumes for the company were 10% below average. The management said that in its post earnings commentary. Also, the company is standing by its volume guidance for this year. That's about close to about a 9 to 10% growth over last year, but again not very impressive. Somani Ceramics, as you would be aware, has been hit hard by the rise in gas prices. So that's prompted it to cut back on production, although it has managed some cost savings by switching to LPG. And the company has also said that gas prices have started coming off their highs, and the company is confident of demand from Europe picking up, but very hard to see that given the situation in Europe at this point in time, CJ.
Yeah, I think Santo Ceramics, Somani is clearly one of those stories in the market, I think, which probably, although the near term looks a little bad, I think the 4 to 5 year outlook is still quite solid, especially at home, where demand for tile makers is expected to be quite strong, given the fact that, according to a lot of people out there, including HDFC, that we are in a new real estate bull cycle, and if that continues going ahead, clearly the construction material sector will also benefit from this demand coming in from that sector. So therefore, I would not be too bearish on the stock over the long term, but yes, in the near term, clearly there are challenges as far as margins are concerned. But talking about margin, I think Santo, I think the management probably will now look at 2023 and hope that once the winter in Europe is over, you could see some sequential decline in natural gas prices globally as well as at home, and probably that could start improving the visibility on margin front as well. Also, if demand situation in the export markets improves, that will also aid margins of the company. So I think this will now be more of an FY24, FY25 sort of a story than an FY23 story at this point of time.
Well, and do we have any queries this morning?
Yes, Santo, a lot of queries coming in from our viewers, and thank you all for all of those. We'll try to pick up some of them. We will not be able to pick up all of them because of the constraints on time. But I think, Santo, somebody wanted to know, that Tata Motors results were a loss. I think this is Satish Jeevanavar. He wanted to know that Tata Motors posted a net loss, of course, when it reported its Q2 earnings, but the stock has been moving positively. So any thoughts there?
Well, to some extent, it could be short covering after the disappointing numbers. A lot of traders would have gone short on the stock, anticipating poor numbers. So, in the short term, probably you could see some kind of bounce back there. But at the same time, Tata Motors has been a laggard in the auto pack for a while now, and the earnings don't give much cause for hope, at least in the short term. Many brokerages too have turned negative on the stock, but as and when there is some improvement on the earnings side, that is when you could see a sustained re-rating. So, in between there could be a lot of trading opportunities, but unless the earning picture shows some kind of visible improvement, it looks unlikely if the stock will be able to maintain that uptrend.
Yeah, at this point of time, clearly Tata Motors is looking like a hope trade. So, we will have to wait and see whether the hope materializes or not. But clearly, at this point of time, investors are hoping that the worst probably is over with the second quarter, and going ahead, especially in FY24, we could see some recovery happening, especially for his arm JLR. Santo, another thought coming in from Maddie Vibes, of course, one of our regular viewers, and he wants us to discuss the current situation engulfing Aurobindo Pharma. Now, this is one stock that you have also talked about in the past, and I've also talked about in the past. Now, the situation at this point of time with Aurobindo Pharma clearly I think it's a double whammy. They are facing corporate governance issues. They're at the same time also facing quite a weak earnings environment as well. Santo, you would want to touch on the corporate governance
Well,
side?
I think it's more of corporate governance at this point in time, and it also happens to come at a time when the earnings is under pressure. And as CJ mentioned here, clearly it's a double whammy. If you recall, some quarters back, Aurobindo had made this acquisition, which the market saw as being quite expensive, and eventually the company had to backtrack on that. And now after that comes the latest development here. There's no clarity on that as to what exactly the nature of the violations are, and whether it will have any direct fallout on the company as such. But it certainly doesn't look good at this point in time. Besides, there's some inspections of its site also underway at this point. So a lot of negative news flow in Aurobindo Pharma at this point in time, and maybe that could keep the prices under check for a while.
Yeah, I mean, as people of the current generations would say probably that the vibe is not matching for Aurobindo Pharma, and clearly, and this is something that has been a prolonged issue as far as Aurobindo Pharma is concerned. Even last year it was pulled up by earlier this year, I think, if I remember correctly, it was pulled up by regulators for not disclosing a lot of the material information which was material, but the company assumed that it was not material. So there are issues with respect to corporate governance, the way the company is run, and clearly in a day and age where fund managers are so obsessed with ESG ratings, corporate governance ratings, any sort of question marks there tend to make a lot of institutional investors especially very, very risk averse. So that is on the corporate governance side. If you look at the earnings side, of course, Aurobindo Pharma has largely been an export story, and at this point of time, if you look at the US market, clearly there is pricing pressure there in that market. Competition has come back. US FDA has come back in full flow, again approving drugs at a very, very fast pace, conducting inspections across the world, and that is creating or bringing back at least all of the same problems that used to exist for the Indian exporters, drug exporters that were there prior to the pandemic. And for Aurobindo Pharma, Santo, the other problem has been the fact that many of its units have also been facing regulatory action from the US FDA. Although on the bright side, it is reported probably recently that the Unit 9 that the company has, that might soon be cleared from the US FDA. So that should aid, some of the product launches as well as product supplies to the US market, and maybe benefit its Q3 and Q4 earnings. But in general, the company is facing margin issues, the company is facing revenue issues, and of course, because of that, the net profit and the earnings per share is also declining. So all in all, it's not a good time probably to be, an investor in Aurobindo Pharma, and you have my sympathies. But I mean, fingers crossed that the situation improves going ahead.
Well, and with that, we wrap up this edition of Markets with Santo and CJ. Thanks for watching, and also thanks for writing in. Continue to do that, and we'll try to take up your queries as far as time permits.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. Till then, have a great trading day.